Since over the past few weeks, I've often shown you signals in the videos where, for example, I would enter a trade or where I expect a downtrend, and we've really been right all along, and I've always mentioned that. I also have to mention it now when I'm wrong. And yes, 2 days ago I made that video. There I said that it's very likely we'll see the bounce again in this green zone and that Bitcoin would recover there, but that wasn't quite the case. Take a look at it. We actually fell a bit further, so it didn't go exactly as I expected. I had expected that we would pick up liquidity here and then continue to rise from this point. But right when we picked up this liquidity at $115,000, more positions built up below here as well, and that's why we ended up dropping a bit further. But I also communicated all of this again in the Telegram group. I made it very clear there that if we don't hold the $115,500 mark, these would be the next price targets. And here you can already see the last price target was $112,650. Let's move over to Bitcoin. We went even lower and the last price target was exactly at $112,000. So once again, we were extremely precise here and pretty much caught the bottom. Seriously guys, that's why you absolutely need to join the trading VIP group. There you'll get all this market structure information and so on much faster, because of course I can't put out a video every minute. So if something changes a bit, I would of course share it there right away. Otherwise, I remain bullish. As I said, we can take this thing out here. We can put the arrow here, because from here I also expect an upward trend, which you can trade quite nicely. We're currently here at $113,000, so let's put it here. I would place our stop loss below the last low, because I think from here we'll make higher lows and build up step by step. If that doesn't happen, then I'm just a fool, but I think it will happen. I would take the first profits here at around $117,000, and with that we'd have a great risk-reward ratio of 1:4. And that's why this would be an easy Bitcoin trade that you can enter live right now. I assume it will work out, otherwise I wouldn't mention it, of course. Several zones become interesting here. First, there's the Monday low and the Monday high. These two zones are the ones that become interesting, so here we need to see whether we break through or not. If we do experience a breakout here, I expect the move to continue up to the Monday high, and that's also where we have our monthly close. Accordingly, I think we can exit again before that point. I think it would be quite good if we encounter resistance here and then correct downwards again. That's how I would trade the whole thing, I just have to say, because in terms of risk-reward ratio, this is a great entry point for Bitcoin right now, since we've really cleared out everything on the liquidation heat map here. Down here, there's basically hardly any liquidity left to pick up, and it's very, very likely that we'll now head towards $119,000 because there's a lot of liquidity there again. And the market makers, they chase this liquidity. That means, in my opinion, it's very likely that we'll now see a proper upward trend again. With Ethereum, it's pretty much the same thing. This was the zone I showed you in the video. I'm setting the zone a bit lower now, or rather, I would also open a long trade here. Right here at this zone, we set our stop loss just below the last low, and here too, we're aiming for a risk-reward ratio of 1:4. But I mean, that's simply the most worthwhile. I think we can also expect higher lows here. That's why it's important that we don't drop below here. If we do fall below the last low here, then this structure would be invalid, which would also be okay. But I don't think that's likely. I also tend to think that with Ethereum, we've already seen the worst for now, because here too we've collected most of the liquidity, and especially around, well, $4,800 in this all-time high area, there's a lot of liquidity. I think we'll be heading right back there again in the near future. The good thing about all these dumps we've seen recently with Bitcoin and Ethereum is that the funding rate has dropped significantly. The funding rate always shows how much we swing in one direction or the other. And every time things overheat with Bitcoin, we can clearly see the funding rate rising. That means the leveraged positions keep getting bigger and the imbalance becomes more and more extreme. And that's not how it should be. And to prevent things from escalating too much, we always see a dump. Of course, in this bull run, it's extremely intense. So we end up with really expensive trading fees because the funding rate has risen too much. But right now, thanks to these small dumps we've seen, the funding rate is dropping again and everything is back in balance. And in the long term, this way we can exit more sustainably, step by step. Because the great thing about the P-cycle top indicator is that the longer this cycle stretches out, the higher price targets we can aim for. And I mean, the P-cycle top indicator, one of the most significant top indicators for Bitcoin, which we haven't hit yet, clearly shows us that we only become overheated at $170,000 per Bitcoin. And it keeps rising the longer we stay in these high price ranges. And that's why the price targets keep getting higher and higher. And now I want to ask you, do you think, or can you imagine, that we will see over $200,000 per Bitcoin in this cycle? Can you imagine that or not? Feel free to write it in the comments, because over the past few days I've definitely been asking myself, will we end up above or below 200,000 in this cycle? And to be completely honest, right now I tend to think, judging by how things look, that we will see over $200,000 per Bitcoin in this cycle. What also becomes very clear again with these market sentiments is simply the fact that we see a dump here and immediately the retail investors drop out. We've really seen now that some retail investors have exited and sold. Retail investors are once again very pessimistic. I mean, just take a look at this, please. Here, this is the retail investor, and here is the Bitcoin price. We can see that generally, when Bitcoin rises, retail investors also get back in. They usually move in a pretty similar pattern. But what we saw with the last increase, with this rise, was that there was no response at all from retail investors. Retail has given up. Bitcoin has gone up here, but there really hasn't been any significant increase in retail participation. And you can basically see, I think, that retail investors are gradually capitulating more and more. And that's exactly what's important, because the less interest retail investors have, the more likely it is that the market makers will redirect the whole thing again. Because, I mean, just look at this. The Bitcoin long-term holder net position. We've seen such a strong increase here. Every time we've seen such a strong increase here, Bitcoin has also gone up. I mean, it all builds on top of each other. You can see it again down here. We've seen an increase in the net position here, and then a strong upward trend followed. We saw an increase here, and then an upward trend followed. And now currently, we've seen another strong increase here. That means the long-term Bitcoin holders have started accumulating again. The big whales have started buying again, and they're not doing it without a reason. Because, let's be honest, do you really think the big whales, the smart money, are on the wrong side? Do you really think they're mistaken and the retail investors are right? I highly doubt it. Meanwhile, we are even seeing with Ethereum that it's getting increasingly scarce on the OTC market because a massive amount of money is flowing into the Ethereum ETFs again. But people are trying to buy these Ethereums OTC, meaning directly from the miners, so that it doesn't have a price impact. It's really starting to get tight there. But what we're seeing is that huge whales, meaning whales holding over 100,000 Ethereums, are slowly selling, which is actually a good sign, because the most interesting accounts are those holding between 10 and 100,000 Ethereums. Those are the ones we should be relying on and paying attention to rather than these mega whales, because these mega whales with over 100,000 Ethereums, sometimes a 30% increase is enough for them. That already amounts to multi-billion profits for them. But we see the same thing with Bitcoin addresses that currently hold over 100 Bitcoins. So that's also the smart money, people who really have serious capital. So all addresses holding over 12 million in Bitcoin, so really the smart money, are accumulating here again. Take a look at it. The price of Bitcoin is rising and yet the wallets are getting bigger. That's truly a very remarkable development, and it just shows that we're still early in the game. While we see that wallets holding less than 0.1 Bitcoin are in fact selling in these market conditions, on the other hand, we see companies like Bitmain accumulating more Ethereum, buying up large amounts of Ethereum. And not without reason. The strategic Ethereum reserve keeps growing and growing, while retail investors are once again sinking into panic. Don't let yourselves be unsettled. Look at the whole situation rationally. It's much more likely that we'll head towards $119,000 than towards $100,000, and that's how I'm trading as well. I expect that this was the low for Bitcoin and that this here was the low for Ethereum. Accordingly, I opened these trades, and I think in the next few days we can take a look at these trades and see how everything has played out. Otherwise, write in the comments whether you think we will reach $200,000 per Bitcoin in this cycle or not. I'd be interested to know if you suspect that and whether you think it will happen this year or maybe only next year. Write it down, and otherwise check out the VIP training group. Everything is free, everything is in the description. See you next time, friends. Bye.